Seattle has ranked among the country's stellar local apartment market performers throughout the current cycle. And already great stats just got even better during the past year. We'll take a look at driving forces in this Pacific Northwest hotspot on today's Apartment Market Dynamics from NPF Research. I'm Greg Willett, joined today by Cameron McIntosh. So Cameron, start us with that rent growth story for Metro Seattle.
Seattle's effective rents were up 8.6% in 2015, which is up from the 4 to 6% clip posted from the 2010 to 2014 timeframe. Most impressive are the big rent jumps seen at the top end of the market. Despite a bunch of new supply, pricing was up 7.3% for Class A product, which is a fantastic showing, even though it is below the 10.9% growth in the Class B segment. Additionally, Class C stock did see rents increase 6.1% for the year.
So Cameron, you talked about the big block of new supply that's come online in Seattle, and so let's look at some numbers there. Specifically, properties finished in 2015 totaled 9,610 units, and those additions have come on top of just over 10,000 units that were built in 2014 and roughly 8,100 units that were finished in 2013. To give you some perspective, 8 to 10,000 units a year compares to a 20-year average that's around the 5,000 unit mark. So big increase in those new supply numbers. And Cameron, it's interesting that a lot of this has really occurred in the urban core, and Seattle is one of the leading cities for urban apartment construction. Let's look at what's happened in some of these urban submarkets. You can see that in this 3-year time period, downtown Seattle, we've built a little over 4,100 units. Two other really urban submarkets, Capitol Hill Central District and South Lake Union Queen Anne, we've built 3,000 to 3,200 units in each of those submarkets, and then area that's kind of an urban suburban transition area, the University District Ballard area, 3,900 units. So all in all, in this 3-year time period, half the new supply came in these 4 submarkets.
Thanks to Seattle's robust economic growth pace, demand has kept up with the aggressive building levels seen lately, Greg. The current reading is 96.4% for 2015, and occupancy has been strong in the 95 to 97% range for a full 5 years, Greg.
As we look ahead, we do think that Seattle is going to continue to outperform the national norm on the local apartment segment, but it's going to be really hard to keep the momentum that we've seen in the last couple of years because this new supply number, while really big already, is about to get a lot bigger. So we currently have under construction 19,105 units, and delivery scheduled for calendar year 2016 jumped to 14,757 units. So that is an all-time record for calendar year new supply.
With those increased completions, Greg, the base NPF Research forecast for 2016 is calling for occupancy to backtrack roughly 100 basis points and rent growth to come in just a hair below 5%.
So Cameron, good overall numbers. We will have to watch what's happening on the neighborhood level. A little bit of bumpiness there in the areas that are adding the most new supply, including those urban submarkets, as well as we're heating up in building activity in the Bellevue area as well. That wraps up our look at the Seattle apartment market. I'm Greg Willett. He's Cameron McIntosh. Thanks for watching Apartment Market Dynamics from NPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.